One major misconception that I find that homeowners have is that if you make a significant principal pay down on your mortgage, the only way to get your monthly payment lower is to do a full-blown refinance. That is not true. I'm going to show you today a hidden trick that very few people know about called recasting. My name's Miles Pitcher. I'm the owner of Superior Lending. I've been in the business for 24 years now. So we'll look at what recasting is. When is recasting better than refinancing or vice versa? What are the eligible loan types, the process, and at the end, I'll give you an example and show you how powerful this can be. So for recasting, here's the definition. It is mortgage recasting, is also known as re-amortization. It's the process in which the homeowner makes a lump sum payment, and generally that's $5,000 or greater, towards the principal balance of the loan. And then, unlike refinancing, recasting does not involve taking on a new loan or altering the interest rate. And I would say also that it doesn't include adding a bunch of closing costs. Instead, it recalculates the amortization schedule based on the new lower principal balance. Okay. Some of the common scenarios that we see where recasting really works is the buy before you sell. Maybe you have a home that you are selling, you want to buy your new primary residence, but your old home needs some repairs. It needs a little bit of time to get ready to sell. It may not sell immediately, but you have the horsepower to be able to buy your new home, close, move into it, and then take your time selling the old one. When you sell the old one, you will be swinging over a large chunk of equity. That's where recasting makes sense. I have a client right now who gets some really nice year-end bonuses, and he wants to be able to recast his loan where he applies those year-end bonuses towards his loan. Stock options that get exercised and cashed out, maybe you get an inheritance, or at some point, maybe you have a sale of some other real estate investment properties and you want to apply this to your primary residence and pay down the mortgage. So here are a few reasons not to recast. Number one is I would always encourage my clients that if they have consumer debt, car loans, credit cards, and they haven't taken care of those, to me, it doesn't make sense to take the big chunk of money and pay down your mortgage when you really should be taking care of some of those higher interest items, clearing those up first. The other reason when recasting doesn't make sense is that interest rates currently are better than what you have on your current mortgage. In that case, that's where a refinance could make sense. You need to talk to your lender and ask them about a strategic refinance, meaning a no cost or reduced cost mortgage. And we're always available to help give you guys quotes on those, regardless of what state you're in. And then number three is you are more interested in having your mortgage paid off faster than having a lower monthly payment. Obviously, when you make that large principal pay down, you're cutting years off your 30-year mortgage. And if your goal is to get that mortgage paid off as soon as possible, then you don't want to recast. Because on a recast, you don't restart at 30 years, you just keep on the same schedule that you had before you made the principal pay down. So if you, in year 28, month number 2, you make a large principal pay down and then recast, you stay on the same schedule of 28 years, 2 months for the rest of the loan. All right, here's the process, real simple. Number one, you make a large chunk of a pay down on the loan, $5,000 or more usually. You call up your servicer second and ask them to say, hey, can you recast the loan, or please do that. There's generally a one-time fee of $125 to $300. Most lenders that allow recasting will allow you to recast multiple times. And then you get a lower monthly payment. The loan is re-amortized and you get the lower payments for the remainder of the loan. So here's a few things to be aware of. Can you recast a conventional? Yes. Can you recast a jumbo? Maybe. We have a few jumbo lenders that will allow recasting. Most of them do not, but you need to talk to someone and make sure that if you're doing a jumbo loan, that you can do the recasting. All of our government loans do not allow recasting, VA, USDA, FHA. And then these loans that we call non-QM or non-qualified mortgage, that would be the DSCR, the bank statement loans, the no ratio loans. We have no idea because they are really based on guidelines of an individual lender. They don't have any standardized guidelines. So you would have to ask. But here's a big caution, and this includes the conventionals also. Not all servicers will allow recasting. Okay. Freddie Mac, Fannie Mae, conventional loans allow it, but it's still the decision of the servicer of the loan. So what you have to do is you have to ask your lender, is the loan or the lender that you're taking me to, will they guarantee that I'll be able to recast my loan? And you need that. So if you're struggling and finding that, please reach out to us. We have certain lenders we use and work with who are fabulous, and we can make sure that the loan stays with a lender where you can recast. All right, let's go through a scenario. This is a client that wants to buy a new primary residence. They have repairs on the old one that need to be done. They have the horsepower to buy the new one. They have the funds to do a 5% down. So you can see the scenario right here on the right, $500,000 loan amount, the rate, the total monthly payment with principal, interest, and private mortgage insurance is $32.69 a month. We fast forward a few months, the home now sells, and our client has $80,000 that they'd like to put down as a principal reduction on their loan. So what does it look like now? You can see in that second column, our new loan balance now is $420. It would actually be a little bit less because the client will have made a couple of payments. But you can see that they've done the recast. Their new principal and interest is $2,620. They now have 20% equity in the home because of the extra pay down they did. So the PMI drops off also. This is huge. And you can see their new monthly payment falls to $2,620, a monthly savings of $649. That is pretty awesome. You can see how powerful this can be for a client in being able to figure out or find a way to get their monthly payments lower without paying a bunch of closing costs. So here's how you can reach my team or myself. If you have any questions or we can help quote this out for you, please reach out to us. We're always available to help, even if we're not licensed in a state where you're located at. We have a great connection or a great network of people who are just fabulous at what they do, and we can connect you with some people who can help you. Thanks for watching this video. My name's Miles Pitcher. Have a great day.